Okay, now welcome to multiple choice question under Ind AS 16. Are you ready to take the challenge? Let us test your knowledge on Ind AS 16 property, plant and equipment. Questions are little advanced. Healthy Inc. quickly reply, okay, one by one. Brought a private jet for use of its top ranking official. Oh my God. The cost of the private jet is $15 million and can be depreciated either using a composite useful life or useful life of the major component. It is expected to be used over a period of 7 years. The engine of the jet has a useful life of 5 years. The private jet's tires are replaced every 2 years. The private jet will be depreciated using the straight line method over. Now there are 4 options. Option A, 7-year composite useful life. Option B, 5-year useful life for engine. 2-year useful life for tires. 7-year useful life for balance cost of jet. Option 3, 2-year useful life based on conservatism. Wow. And 5-year useful life based on simple average of the useful life of all major components. So what do you think is the answer? Option A. A is not right. Sure, B. Let us ask computer. Computer is also saying B. B is the right answer. You get 10,000 rupees. Question number 2. An entity imported machinery to install its new factory premises before year end. However, due to circumstances beyond its control, the machinery was delayed by a few months but reached the factory premises before year end. While this was happening, the entity learned from the bank that it was being charged interest on loan it had taken to fund the cost of the plant. What is the proper treatment of freight and interest expense under Ind AS 16? So this is my question. So you have following options. Both the expense should be capitalized. Interest may be capitalized, freight will be expense. Freight would be capitalized, interest cannot be capitalized, and both expenses should be expensed. Now first of all, whether freight is a directly attributable expense, whether interest is a borrowing cost under Ind AS 23, that is not very clear from the question, but it appears that this machinery is not a qualifying asset. It is in a ready to use state. If an asset is in a ready to use condition, it doesn't require significant amount of time for getting ready, then it is not a qualifying asset. And if it is not a qualifying asset, interest cannot be capitalized. So the answer will be choose that option where freight capitalization is given, interest not to be capitalized is given. So which is the option? Option C. C is the right answer. You get another 15,000 rupees. Okay. You give a wrong answer, everything I will deduct. Third option. XYZ Inc. owns a fleet of 200 cars and 20 ships. It operates in a capital intensive industry and thus has significant other PP that it carries in the book. It decided to revalue the PP. The company's accountant has suggested the alternatives that follow. Which of the following options XYZ should select in order to be in line with provision of Ind AS 16? It says revalue only 1/2 of each class of PP. Then second, revalue an entire class of PP. Third is revalue one ship at a time, as it is easier than revaluing all ships together. And fourth is, since assets are being revalued regularly, there is no need to depreciate. There are interesting options also. Which is the right answer?
D.
So if the student have read the standard in detail, he can easily catch the right answer. An entire class of PP will be revalued. You can't do selective revaluation. The right option was B. Okay, one more. Entity installed a new production facility and incurred a number of expenses at the point of installation. Is it right? The students who are learning from home, they will also reply. The entity's accountant is arguing that most expenses do not qualify for capitalization. Included in those expenses are initial operating losses. This should be. Now the question is the treatment of initial operating losses, which we have discussed in the first few lines only. It should be deferred and amortized. No. Expense and charge to income statement? Yes. Capitalized as a part of the cost of the plant as a directly attributable cost? No. And taken to retained earning? Wow. Students Indians, since it is unreasonable to present it as a part of the current year's income statement, what a great idea, but not acceptable. The correct answer is B. You are finding it easy because you have studied it just now. And every line item we have covered from the standard. But if you are studying it without studying, if you go, you will find it difficult. Fifth question, Ind AS 16 requires that revaluation surplus resulting from initial revaluation of PP should be treated in the following ways. Which of the four options mirror the requirement of Ind AS 16? Means which is the correct option? You are revaluing PP for the first time. Option A is to credit the retained earning. No, we can't credit retained earning. Release to the income statement an amount equal to difference between depreciation calculated on historical cost vis-a-vis revalued amount. You cannot release to income statement. It was under long back old Companies Act. Point C, deducted from current asset. My God. And added to the property, plant, equipment. This even I can't imagine also. Deducted from current asset and added to PP. Last option, let us check that also. Debited to the class of PP that is being revalued and credited to a reserve which is captioned as revaluation surplus, which is presented under equity. So which is the right answer? D or A? Sure D. Yes, D is the right answer. So you get full 7 crore rupees. Okay. Come to the office, take a check. Thank you for this wonderful MCQ session.